What is going on, traders? Welcome back to the Traveling Trader. Happy Monday to you. Let us get right into it and look at Bitcoin. We'll take a look at a couple of other cryptos as well before we dive into a summary about the stock market. Now, Bitcoin has been behaving rather range-bound lately. That's just a fancy way of saying that it's trading sideways for, a fairly long time, ever since really the third week of September. So if you look at the 4-hour chart, it definitely looks like an extended period of range-bound trading. This does help us quite a bit because this allows us to exploit trends or an easily identifiable trend within this range here that you see. And so all we've been doing really, if you're a part of our trading group, you would know this, is just longing at the support with leverage and basically selling at the top with a trailing stop. And then, for those that are a little more risky or risk tolerant, you can also short at the resistance until it comes back to support. Now, the last play that we did, just to give you an example, longing at 7,800, which was a pretty easily identifiable level, right? It's been the strong support all the way going back to that third week of September. We hit 7,800 again. I had my my long order just waiting there for 7,800. I don't chase trades. I let the trades come to our optimal levels, and we are now up 60% on that trade. I did 10x leverage. Some crazy people out there might have done 25x or even higher. You can do 5x. You don't even have to do leverage if that is not within your risk tolerance. But at 10x leverage, we're now up 60%. The move from 7,800 to around 8,250. Now, that is how you can play Bitcoin within the short term, especially when it's in these identifiable ranges. But let's talk about what is actually next for Bitcoin. What is Bitcoin doing, from a larger perspective? What is it doing trend-wise? And I really don't like where Bitcoin or what Bitcoin is doing here. So let's talk about a few of these indicators and why I think there is a pretty big move coming up for Bitcoin, most likely to the downside. That is the most optimal, most plausible, not optimal, most plausible move. And I'll tell you why. So if you look at Bitcoin on the 1 day, basically it's been in this descending channel here, going all the way back to when we established the swing high in June of around 14K, right? It's in this very identifiable descending channel here. Now, at first, this looked like a potential bull flag, right? But the longer that it extends, it's clearly not a bull flag. It's a descending channel. And Bitcoin, while it can still rally up to resistance here, so if we could see a move up to, around 10K or just shy of that before coming back down to support. Overall, I think what Bitcoin is doing is rather bearish in the short term. We are moving away from this 200-day moving average. So for a while, for a couple of days, we tested the 200-day moving average here, this green line. And then when we fell below it, we were still hugged up against it, right? We were tightly correlated with this 200-day moving average. But you see what's going on here. If I zoom in a little bit, you'll see. But we're starting to fade away from it, meaning that 200-day moving average isn't really a point of a sticking point for Bitcoin, right? It seems that there is less desire for Bitcoin to be attached to this 200-day moving average. So that, along with the fact that we see the Bitcoin volatility index, if you look at this, Bitcoin is extremely low in terms of relative volatility. You'll see here, looking at the price over time since July to October, you'll see where we are in that's Bitcoin's price, but you'll see where we are in volatility here over time. So we're in this extremely low range of volatility relative to what Bitcoin has been doing since July. And when you combine low volatility plus low volume, right? You see the volume here. This is the second worst month in terms of volume that we've seen in 2019. Really, the only month that was worse than this was February 2019, and Bitcoin back then was still, I believe, at the 3 to 4K levels. If we look back at February, this was when Bitcoin was still between 3K and 4K. So, this is not a good sign that we see where Bitcoin is struggling to break above a extremely pivotal moving average in the 200-day, and it is failing to accumulate some volume here for a potential retest of that 200-day moving average, and then potentially a retest of resistance here. It does not look good in the short term. You know, like I said earlier when I opened up the video, I was saying that, you know, you could short at resistance, which is currently between 84 and 8,500. That's still a very safe play, a relatively low risk, high reward play, because you could set a tight stop limit just above that. So in my view, in the short term, things aren't looking good for Bitcoin, to be honest. If we take a look at the weekly, you'll see that Bitcoin is still riding that 100-week moving average, and it is riding that to a T. It is definitely not, it's making a conscious effort not to fall below that. Now, if we do fall below that, the next support level that we'll see is around the 100-week moving average. This is around $6,700 currently. Also, on the 1 week, we were forming a bull flag, and it is now turning into more of a descending channel. So we definitely need that volume coming in. If we don't see that volume coming in, then this level here is likely to break down. Again, we could potentially retest the 200. We can even retest the resistance of this descending channel. But without proper volume, if we keep sticking to, you know, recent lows in volume, we could potentially see a breakdown in price. And any rally that really is sustained with low volume, the volume is the number one indicator that rally is a dead cat bounce or a bull trap, right? That's how you essentially identify them, is you look at the volume and see what the accompanying volume is with that move. So now, keep in mind that low volume is also what you would see before a big move up. But, you know, you will see bouts of low volume and then a surge in volume that will take that coin or that asset to the next level. So, you know, you might see low volume before a massive rally, but during the rally, you do have to see volume. Kind of like how we saw here back in June. You see these tall green volume bars here, as well as if you look at something like the OBV, you'll see the increase in volume, whereas now volume just looks extremely flat. So pay attention to that. In the meantime, we'll keep playing these swings. If you're not a swing trader, you certainly don't have to play these swings. You know, what you could do is just continue to accumulate or dollar cost average into Bitcoin. Other coins that we're looking at is Link, obviously the best performer of the second half of 2019, at least as top alt go. We're now up 33% on Link after playing the breakout. It broke above the 50-day moving average and broke above the resistance that we see here with the rounding bottom formed. Entered into Link, and it really has not stopped since. It is majorly overbought here ever since June, when we saw recent highs in most coins. Volume is waning here. So as with Bitcoin, what I was saying is pay attention to volume. So this right here on Link is not great. You don't want to see these massive rallies with very shitty volume. Like, compare this volume here on Link to this volume that we see back here in June on Link, and look at how tall these green volume bars are compared to what we see here. Now, the good thing is it doesn't look like there are a ton of sell-offs. If you look at the OBV, which is a cumulative measure of volume, you'll see that there isn't really any volume outflow in Link. However, we aren't getting a lot of volume coming in to push this price up. So we will eventually see a breakdown potentially here, where if you follow the trade alerts on the Discord, this was a point of resistance around the 0.618 fib level that I said we would probably hit and see some resistance here before the next move. XRP, the gift that keeps on giving, we're now up 18% on XRP. All I do on XRP is really just buy the support going all the way back to August 2018. If you see XRP at the support between 23 and 25 cents, that historically has been a really good support point. And then, back in the third week of September, we saw XRP at 23 cents, and all I was doing was accumulating there, and now we are up 18% 18% as XRP is over 27 cents. So while there aren't many sustained gains in crypto as of late, there are definitely some short-term moves that can be exploited if you know how to either leverage trade or set tight stop limits, how to trade within ranges. If you're comfortable going in and out of trades, that is something that you can leverage. If you want access to the trade alerts, link is in the description. We also do stock trade alerts, and you're automatically entered into the 0.03 Bitcoin drawing that I do on the first of every month. Looking at the traditional markets, the Dow is down almost 0.1%. Same for the S&P, same for the NASDAQ. The markets are basically bracing for the China-US trade meeting that's happening later this week. While a few weeks ago there was some potential optimism about this meeting, there is definitely a lot of nervousness coming into the meeting. Now, one thing you do know is the stock market definitely is at a potential ceiling right now. And the reason is when news and fundamentals don't always shake up the stock market. If we take a look at the S&P for a second, you'll see what I'm talking about. But news and fundamentals don't always shake up the stock market, right? So sometimes there'll be, negative earnings reports or something of the like. And, the investors will be surprised, or traders will be surprised as to why that did not affect the stock or the stock market much. And it's because of what the overall temperature of the stock market is, right? What the overall sentiment is. And so obviously right now, everyone is on the same page that the sentiment is that we are on the brink of a potential recession and things have hit a ceiling. And that's why you see something like the S&P test the same high multiple times. And the same goes for all the other indices as well. So once we're in that position, in that at least perceived precarious situation, then any news story can really affect the market. And that's why Trump's tweets or, a jobs report or something can be the maker or breaker of the market in the short term. So, these China trade talks are definitely going to be a major catalyst. If we see, those trade talks end overwhelmingly positively, then we might break into new all-time highs. If there's any scintilla of negativity, then that is what might start causing a potential stock market sell-off, and we might get to the swing low that we see here back in June, or even worse, potentially the beginning of a recession. But yeah, there's definitely a negative perceived outlook on the markets now, which is why any scintilla of negative market news can cause the markets to take a downturn, right? So we'll definitely be following up on those China-US trade talks later in the week. In terms of stock market plays, there's a few things that I am short. There are definitely a few ETFs that I'm in. There's many different ways to short the market. There's many different ways to play off of the negative sentiment as well. We do send those out in the trade alerts. I will be doing a separate video for the stock market soon this week, because I think that it warrants its own video. But anyway, sign up to the trade alerts if you want access to those. Hit that subscription button, hit the notification bell, leave a comment, leave a thumbs up if you got anything out of this video. Stay safe out there, traders. Peace.